What is happening, traders? What is happening? I hope you well. I hope you're having a wonderful evening and a profitable day so far. Welcome to MGR Francis Trading. Here we are live streaming on a wonderful Thursday evening. And on the platter, we have some live trade examples. And aside from that, we also have some breakdowns for the week and for Friday and what has occurred over the past week. Basically, we are at the end of the week. Friday is a fairly low volume day. But without further ado, let's hop right into it. So on my charts over here, what do I have? I have the dollar index. And your dollar index is very, very important. One of the most important asset pairs that you might have in your arsenal, because you need to understand the strength of the dollar before we can even go ahead to analyze some trade examples and some trade opportunities that we might have over the course of the week and over the course of what can come over the next few weeks as well. So looking at this lovely pair, I'm on the hourly time frame. I am more of an intraday type of trader, so I prefer getting into my positions and getting out within a week, if less than that, ideally within a day. But over time, I have found myself going ahead and placing positions and holding them over the course of a few days. So I'm fairly flexible in that regard. I can swing, of course. We can be investment managers. We can hold positions for a longer period of time. Absolutely, we can do that. But at the same time, we prefer to find ourselves going ahead and holding positions within a single day. We are retail Forex traders. We are not investment managers at the moment. And most individuals are as well. And unfortunately, we simply don't have the capital to find ourselves holding positions and seeing that value in our portfolios increasing with a small increase in the value of whatever asset pair we are trading. So that's very important to understand. But of course, along with faster entries and faster trades comes a lot more risk. And with a lot more risk, you need to understand what exactly you are doing so that you can go ahead and be a profitable trader. So if you had a stop loss day today, unfortunately, don't worry about it. It's good. Did you follow your rules? Was it part of your system? And did you not revenge trade thereafter? And did you follow your rules after a stop loss has been taken? That is very, very important. The most important aspect of trading is ensuring that you are disciplined and ensuring that you follow the system and whatever the rules the system has in place, whether you win or whether you lose. Most important aspect that you can take away. So let's hop right back into it. Over here I have the dollar index, and with the dollar index I like to adjust my microphone so that I'm able to actually look at my screen without compromising my sound quality of the microphone. And I'm going to turn my head and have a look, and we see that we are in somewhat of a downtrend, meaning that there is a bit of dollar weakness occurring, which of course for dollar quoted pairs, it means that the value of that particular asset pair or that stock is an increase in value. And for dollar based pairs, it means that the value is then decrease in value. Apologies for that. Let's go back to that explanation. If the dollar weakens, dollar quoted pairs will increase in value, dollar based pairs will decrease in value, meaning we'll see more of a downtrend on dollar based pairs and more of an uptrend on dollar quoted pairs. You'll notice these on your stock indices, and of course Euro USD, and an example of a dollar based pair would be USD JPY, and the stock like Microsoft or Nvidia or Tesla, they would tend to then decrease in value based on dollar weakness. That's very important to understand. Moving on, with regard to this, we're in somewhat of a downtrend. We had quite a nice swing high over here over the course of the beginning of the month. We had a lovely swing high up there, and over the course of that final week in July, we had quite a nice strong push towards the upside. With that being the case, that's okay, that's great. But looking at current market action, looking at current price action, we are somewhat in a downtrend. And being in a downtrend, it just simply means that the dollar price is weakening, or the value of the dollar is weakening. So I'm going to have a look there. It's actually quite interesting for me to analyze this now. So look at this, because there's not much levels of support and resistance. I find myself only concerning myself with the most important levels of support and resistance. And of course, what will assist me is looking left to determine, was this level actually a valid level of support? Was it actually a valid level of resistance? And evidently, looking at this, it's this level that I've just highlighted certainly was. And that's great. That's good to see. What else can I see that perhaps was a good level that price is currently tapping, or that it has tapped before? What I see on my chart happens to be a level right over here. This level where price formed a lovely resistance over here, a nice trend line touch over here, indicates to me that it's a valid level of resistance. It was recently respected, so when price decides to go right back up to this level, I would expect some resistance to occur with the price action, for it to either, as you can see over here, it kind of somewhat stagnated. I wouldn't say stagnated, but it's somewhat ranged around, being very, very indecisive with its price action. That indicates to me that this is a perfect level to look for an entry of a position, or to see if I can find some type of confluence for me to trade. Now, with a lovely introduction that we've simply done over here, I'm having a look at this and I'm thinking to myself, what's the next step? What's going to occur? Where is current price? And where would I only look to get involved with any positions if price were to trade back down into that level? So we have quite a number of levels of support and resistance over the course, or over this entire range of price action. But is that enough for me to want to actually go ahead and get involved? Do I care enough about these levels of support and resistance? Perhaps I do, perhaps I don't. At the moment, I do not. These are the levels that I look at, that I think that we are within this range over here. If price either runs up to this level, I'll be very, very interested. Or if we decide to find ourselves reversing back down to this level of support, then I will only look to think to myself, okay, I am now going to look for an entry to find price to head within my direction. Now, we don't trade the dollar index. We don't do that. But we look at it to determine where can the volume then derive itself from. Because once we touch this level over here, then I'll hop onto my corresponding Euro USD or AUD USD or Nasdaq or US 30 or Dow Jones or the S&P, and decide and think to myself, let's have a look and see, are we tapping a similar level of resistance? Is there a correlation between the dollar index and whatever asset pair that I'm trading that is USD based or quoted? And can I find some type of correlation, some type of either positive or negative correlation, and use that to my advantage? And that is essentially what trading is all about. It does not have to be complicated, but you need to ensure that you know and you understand the methodology of your system that you are using to trade. So I'm finding myself speaking in loopholes, speaking in circles all the time, moving back to, are you following your rules of the system? Because that ultimately will determine whether you will be a profitable trader or not. So it's something that I always highlight, because it is the foundation of any chance of profitability. So please take heed of that, and let's move on to perhaps something more fun, to perhaps something more interesting, to AUD USD. So to highlight, before I actually go over to AUD USD, I am waiting for price action to find itself either heading towards the upside or reversing from where we are, perhaps a first, second, third, fourth, fifth trend line touch, perhaps a fifth trend line touch, that might be the indicator, that might be a catalyst to have price reverse back down into this level of support, and from there price can then find itself either respecting this level of support or breaking through it, retesting it, and having a run towards the downside. So that's my bias. That is exactly what I'm looking at, and that's what we'll be seeing as time goes on. Now, let's head over to one of my favorite pairs, AUD USD. AUD USD is one of the Forex major pairs. I'd argue and say it's the smallest Forex major pair, that and NZD USD. Let's have a look. What is happening right now? Some very icky price action. Range bound, that's fine. Let's pull out the indicator. I'm now going to head over to my 1 minute time frame, because we are scalping company. You know, we enjoy scalping. We scalp and we enjoy it and we love it. So we have a very, very tiny box over here in Tokyo session. You had a wonderful position taken over here over New York. So normally with this position, I love this position. I absolutely adore this position. And we had a lovely candlestick break above this lovely box. Place a buy position, stop loss below the box, take profit. Normally a 1-to-1, it's all good. You can have 1 to 1.5, 1.1 to 2. You barely made it. This is your 1 minute time, so you have to compensate for spread and commission, as well as your lot size with an increase, higher commission, bigger spread, and of course the spread will then take part of your risk to reward. Normally, if your pip size is bigger, then the spread won't be as much as a problem. But when you're dealing with, you know, with a 5, 6 pip stop loss and a 7 pip gain, I mean, your gain needs to be 1 to 1.2 at least, to ensure that you have at least 2 pip worth of spread, unless you are using a zero spread account. But generally on those accounts, it tends to be a higher commission. So you still have to factor in the amount of commission to the amount of your trade, but normally the commission is okay, as that is not as much in comparison to your lot size, normally about less than 1% of your lot size. So that's not too much of a concern, but the spread is perhaps the biggest concern in scalping. And you need to ensure that you have an account that is either a zero spread account, or alternatively you are calculating for the spread in accordance with your lot size with this particular trading strategy that we have here at MGR Forex Trading. So I'm very happy with what has occurred right now over the course of New York. That's a fantastic. Oh, wonderful. In any event, I'll leave that where it is. And having a look at Tokyo. Tokyo is also wonderful. We are approaching an area of concern. And this area of concern, this point of interest, this level that we are approaching, it's all the same thing. Means all the same thing. It's simply an area in which we are looking to enter a position in the market. We're looking to place a trade, a position. And with that being the case, what position are we going to be placing? What exactly are we going to be doing? And that's very, very simple to explain, as I have explained before with New York. So all we're doing is we are waiting for price to either break above this level over here, above the box. And if we do break above the box, we place our stop loss below the box. So that is important. I want to reiterate this. It's a candle closure above the box. We threw a wick above. We have not closed the candle above. Only now, even now, if you were to look carefully, that candle closure is just on the box, slightly below, just on the box. It's not above. It has to be a clear break above the box. And once it is, you can then look at placing a position. Of course, your lot size would then be something of almost 4 lots. Wow. You could say 4 lots. 4.5 lots. 4.5 pips. So ideally it would be around that lot size, depending on your account size, of course. If you're using a cent account, if you're using a standard account, it depends. And it does depend on your account size as well. So your account type, your account size will accommodate and allow you to calculate the accurate lot size that you would be needing in order to ensure that you are utilizing a responsible risk to reward ratio, or a responsible amount of risk on this position. So with that being the case, that's wonderful. I am happy to see how this plays out. We still have not closed above the box as yet. So until we do, I'll place a lovely position and I'll be waiting. This might take some time, but ideally of course, you know what, we have a bit of time left. It'll take some time, I'll be waiting, and we can move over to another pair and do some analysis on that particular asset pair as well. I prefer USD quoted pairs. USD base pairs isn't too bad, but my preference is USD quoted pairs. And as price is running up, we have our candle closure. Now you enter in your position and you simply wait. That's as easy as what it gets. This is also not a proprietary indicator. It's something that you can find on TradingView, so you don't need to worry about having to spend any funds or having to determine how do I use it. Of course, how you utilize the indicator, because you still have to find yourself adjusting it correctly. That unfortunately I can't provide to you, because I do provide it to my paid clients, and it would be a disservice to them if I give this information for free. All I can do is showcase it, but I can't find myself, providing that information to you at no additional cost. So that is unfortunately where I stop, and I go ahead and have a look at EURUSD. I'm not a fan of EURUSD for the simple scenario that it doesn't work exceptionally well over the course of Tokyo session. It works much better on London session. In fact, this method was designed around London session. New York and Tokyo is simply a bonus. On some asset pairs, it works better with Tokyo. On some asset pairs, it works better with New York. Majority of asset pairs, it works exceptionally well with London session. Hence why you'll notice we are using a 1-to-1 risk to reward ratio. So that is what we have on the platter. That's one of the methods that we utilize at MGR Forex Trading once again. And we are in partnership with XM. And I'm exceptionally proud to have this broker be able to back me for the past year and a half now, actually. It's a year and 3 quarters. I'm very, very happy, very, very chuffed. And they are wonderful brokerage. Of course, I have to say this about them, but genuinely my experience with them has been absolutely positive. I've never seen, and you'll notice on the text on your screen at the moment, the pop-up text that you see, they are the only brokerage that offers you a 100%, or apologies, they offer you a 50% drawdown bonus. What is a drawdown bonus, you might be wondering? That is a bonus where in the event your account goes negative, or in the negatives, your account is allowed to run up to 50% negative of your account deposit. So if you deposit, as an example, $10, you are able to run a negative $5 drawdown, and only then will they close that position. If you deposit 100, you're able to run a negative drawdown of $50. If you deposit $1,000, you're able to run a negative of 500, and so on and so forth. I'm not sure if you can ever do this, but if you deposit a $1 million into your account, then you will have a $500,000 drawdown bonus. That has never happened before in my life. I've never seen that deposit occur. But if you do ever do that, then that is exactly the service and the offering that they offer you. Irrespective of your profit, or irrespective of your deposit, you will always have that drawdown bonus in relation to your deposit. So if you deposit $5 and you make 50, you will not get a $25 a drawdown bonus. You will only get a $2.5 a drawdown bonus, as that is in relation to the account that you have, or in relation to the deposit that you have made. So that's very important to understand. And yeah, I think that they are actually the only brokerage in South Africa that I know of, and internationally, that is able to offer you this service. But of course, this is only offered underneath or under my affiliate account, which is in the description, and you're welcome to open up your account with them. You also get a 100% deposit bonus. Of course, that's only to allow you to enter in a much bigger lot size, and that is exactly what that is in that regard. So with that being the case, that's a wonderful service that's been offered to you. Please take heed of it, make the most of it. It's a wonderful service, and I utilize it quite often, and it exceptionally helps us when we implement our news trading strategy. So it works very, very well for news trading. It works very well for even normal trading. Only then you have to deposit every single day, and you have to do your calculation on how much are you willing to risk for the month, and all that planning, we help you with that. At MGR Forex Trading, as the CEO and founder, I assist you with that. I help with the planning. It's important to plan. It's important to know exactly what your goals are for the month and what you are going to do. And I might sound long-winded, but I can assure you this is important. This is the foundation of your trading, and without this foundation, I won't say you're bound to not succeed, but with the foundation, you will definitely succeed. That's what I will say. Okay. Aside from that, we can say that we are running a little bit of a profit here on Euro USD already on this position. However, we came back down to entry and we are running a bit up again. Let's see what happens. Let's see what occurs over the course of Tokyo session. I'm going to head over to NZD USD. Not too big of a fan on this position or on this asset pair, but you know what? It's a good asset pair. It works very, very well in terms of price action, and it's good. I think it's a wonderful asset pair to find ourselves trading. And here we are. You see, we haven't even broken above the level as of yet. Almost did, but unfortunately, we are getting cold feet at the moment. Simply not working. But yeah, until price can break above this line, I'll stay out. And that is as simple as what it should be. You shouldn't be guessing when you are trading. If you're guessing, you're gambling. I think that that's a fantastic motto in trading. If you are guessing, you are gambling. There should be no need to guess. You should know exactly what you are going to be doing, when you're going to be doing it, what conditions need to be met before you do or before you enter into a position. And until those conditions are met, you simply stay out and you wait. And you sit in your hands and you be patient, and there might not be an opportunity today, but there will definitely be an opportunity tomorrow. This is quite a large one over here. You see, we've been range bound for most of the day. Most of the day we've been range bound, but I couldn't say range bound per se, but the past few hours we certainly have been range bound. This is definitely a result of it being the pound to the dollar, and the pound only works very, very well in London, and the dollar works exceptionally well in New York. So of course, unfortunately, it's quite unfortunate. We'll have a look here at New York. New York was quite a good session. I honestly wouldn't find myself placing a position now during the course of Tokyo, but in the event price does find itself breaking above or breaking below, we'll be patient. We sit in our hands and we simply wait. Let's have a look over here. And what I do see is price is tickling the top of the box. Almost there. He's taking his time though, but he's there. You know, he's there. He's there. Bit unfortunate, to be honest with you. he's finding himself going ahead and doing that. But in any event, I think I accidentally went to the following pairs. Bitcoin. Bitcoin went quite nice to the downside. Look at that. Perfect. Hits your take profit and reverses. How much more accurate do you want me to be? This is AUD USD. We're starting quite up nicely. Oh, that's lovely. Beautiful. Beautiful. Let's go back. Taking some time though. Gosh. Look at New York here on Bitcoin. What a wonderful one. And then it reverses again. We are too good. We are too good. MGR Forex trading is the best. And I'm giving you this method of trading if you're wise enough to look a bit further than all the words that have been spoken. It's very, very simple to implement. The method of trading, of course, I can't reveal that to you, but if you are interested, you're welcome to join our free Telegram group. I don't send my analysis there, but I give you a lot of tips, hints, daily motivation, lots of information in that Telegram group. So you're welcome to join that. And if you're looking for more personalized mentorship, my website is in the description below. And you're welcome to purchase a lovely course where I take on a Zoom meeting and we go through the very, very foundational aspects of trading, what you need to succeed. And once you have that, I can assure you, you will only go further. You will only begin to start building upon the knowledge at which you already have. And you can do so without a mentor. But certainly, you will go ahead and you'll find yourself not making the mistakes that a beginner normally makes. And certainly speed running and being able to really speed up your process of understanding. And once you understand how to trade, it never leaves you and you will always be able to make money. And it's been said so many times already, but I can assure you that it always is true. Okay, if applied correctly, USD JPY, our first USD based pair that we have, not too bad. See, it's very, very slow over the course of. I'm surprised it is quite slow. It is a Japanese yen, but it's quite a slow pair. USD has most of the volume in this pair. That's okay. That is okay. In this scenario, you would notice that it was somewhat of a fake out. A fake out is two candlestick patterns. One below that breaks the box. And changes color. A quick tip over here. One below. Make that red. Let's make him red. Next one like this. I'll make him green. Fake out is when price opens over here at the top of the red candle and closes at the bottom of the red candle. Price then opens at the bottom of the green candle and closes at the top of the green candle. Normally, this green candle finds itself either closing a bit higher than the red candle closes, or it can be slightly below. Irrespective, there usually is a level of support or resistance somewhere around this level over here, and price has broken cleanly below that level of support and above this level of support. And when it does that, it means that price has allegedly liquidated positions within this level of support, tapped below, and then immediately found itself breaking right above. Normally your point of entry would find itself being when price retests this level of support and has run towards the upside. So if we analyze and if we say, okay, our tip of the box, that is a level of support. So our bottom of the box is a level of support, and price found itself breaking below the box. Let's zoom in a bit more as you can't see so well. And price found itself breaking below the box, above the box, retested the box 3 times, and then had a lovely run towards the upside. Now, you must understand, you were in a sell position when price originally broke and closed below the box. You were originally in a sell position over here. But as soon as price found itself closing above, you exit your sell position and you in a small loss, and you open up a buy position at this level here once again. Now your stop loss will be the same size as the box. So you are essentially duplicating this New York box. Let's duplicate it. You are duplicating the New York box. The same size. Let's determine what is the size of this box. The size of the box is 1.61 or 161 pips. 161 pips, let's calculate that. Down 161. It's around there. Your stop loss then is at 161 pips. And your take profit can be either the tip of the box, or alternatively, it can be a bit higher. Look at the wonderfulness, the power of this. Look at that hesitation. As price then closes above the box, retests the box, second entry, and runs further up. If you have the correct price action that occurs along with this. So you can scalp with this method, or you can be more conservative and simply say, you know what, I want to have a simple method. I open up my indicator puts the box on my screen, I look at price action in relation to the box, and I determine to myself, what do? I enter when price breaks above the box, 1-to-1 risk to reward ratio, I walk away, I'm done. And you can trade that method, you can trade exactly the way I explained 2 seconds ago, and you will make your money. And you will be. I think I need to raise my seat now. I need to actually say this to you, and you will make your money. And if you have a 50% drawdown bonus, you will make even more money. Like, what more do you need to be a profitable trader? What more do you need to be a successful trader? And at MGR Forex Trading, we build successful traders. We build you from having absolutely nothing. You can have nothing, and we'll take you from where you are, and you will be a successful trader, and you will make your money, and you will be able to earn a living. What other mentor is willing to do that? There is no other mentor that's willing to do that. There are some secrets in this industry that only us as mentors who spend thousands of hours behind the charts, that we understand, that we know, because we put a crazy, an insane, an illogical amount of time mastering our craft. And once you master it, it's a skill that nobody can take away from you. So anyway, moving on. Take heed of that. MGR Forex Trading. Take heed of that. Now moving on. I'm going to go ahead and remove my drawings. But before I do that, I'm going to go ahead quickly on to, this is USD JPY. I'm going to go ahead and have a look at Tokyo. It's moving nowhere, absolutely nowhere. So I'm not concerned about him. I'm going to leave him where he is and go to USD Swiss franc and see, perhaps he has something lovely for me. Normally, a TradingView is not this slow, but unfortunately today, it is not TradingView, it's my fault. It's very, very slow. In any event, moving on. Tokyo once again. Tokyo is quite nice, moving quite nicely. It's kind of range bound, nothing very important, nothing I'm really happy with, to be honest with you. I mean, look at this. Over Swiss franc pairs are very, very wicky. They send lots of wicks. They tend to go up and down all the time. I'm not very impressed with this price action, to be honest with you. I think it could have been done better. I stay away. I think it's not worth the time and the stress at the moment to even have to wonder about what we're going to be doing with that. So let's have a look. Perhaps USD CAD might give us some better results. Okay, so USD CAD, unfortunately, it's stop loss. Yeah, it's sad. Again, USD based pairs, they don't really have the best movement over the course of Tokyo session. With it being USD CAD, I mean, they're both in the northern hemisphere, they're both far away from Asia. So you can imagine the price action will be the worst around Tokyo. Unfortunately, I don't have the time to actually stream during New York session and London session. I mean, that would be the perfect time to be streaming. It'd be a wonderful opportunity for me to showcase this method to you. This is what we know, what we call at MGR Forex trading the MGRFX scalping method. We only use methodologies, we don't use strategies. And you might be wondering, what exactly is the difference between a methodology and a strategy? I think it's always in the name. A methodology is a method that you can implement on any single asset pair. A strategy is something that is more discretionary, meaning you need to really plan around how you have to connive with a plan, how you're going to actually implement it. It's very, very different in comparison to a methodology, where you take a method, set rules, it's a system, you take the system, you apply it in your chart, it's going to work. Take that same system, apply it to a different asset pair. Now you can take him, you can move him interchangeably in between asset classes. So you can move between Forex, you can go to indices, you can go to stocks, you can go to shares, whatever it may be, cryptocurrencies, synthetics. That system can move interchangeably between asset classes, whereas the strategy is a bit more discretionary. It can definitely still work, but you have to accommodate for the market season. You have to tweak it a bit here and there. You have to change the method and the strategy every now and again. With this method, I wouldn't say you change it really. You accommodate for season changes, and the overall method will still end up working. And that is the main difference between a methodology and a strategy, and it's very important to understand that. And we only work with methodologies because that is how you apply some level of concreteness, some level of I was about to say construction to the financial market, which is very, very odd, a very odd way of explaining this, but that's how you go in and you apply some level of rigidness, something that you can actually have that will work in this sea of that's constantly evolving, called the financial markets. So that's somewhat our method. That's how we trade, and this is a prime example of hitting the stop loss. So what happened here? Well, there was an overpowering level of resistance that we tapped, and unfortunately we respected that level of resistance and not the box. Understandably, I mean, the box itself is an important area in the market, and yeah, we unfortunately smacked a lovely strong level of resistance, and we respected that resistance, and price found itself reversing all the way down. As simple as that. There's no real reason why. It's not rocket science per se. I mean, you were there, tapped it. You know what? Would have been a nice sell, but we broke above, and our stop loss got whacked. Nothing more to it, ladies and gentlemen. Nothing more to it. And it's a wonderful craft that you have to be able to analyze the financial markets and make your money from it. It really is a wonderful tool. Again, New York being the main bread and butter today. For most currency pairs, it seems New York simply took the cake and was a cherry on top. It really did the most and worked exceptionally well. Found itself hitting a lovely take profit here once again. New York, a 1-to-1 risk to reward ratio, $10 or 10 pip stop loss, 14 pip reward. Very easy. If you had a zero spread account, you would be happy. If you had a more of a standard account, you would have had a lovely take profit of at least 1 to 1.8 or 1 to 1.9, 1 to 0.9, 1 to 0.9 risk to reward ratio, which is not too bad either. After 6 positions, you'd be profitable, so that's totally fine. Probably wondering, why did I say 6 positions? After 2 winning positions, you'd be profitable. But of course, if you look at the percentage wise, in order for you to remain profitable overall, you would need at least a 60% win ratio, which we achieve all the time. We're closer to 80%, honestly.